Lots of news lately about a recession potentially coming or a housing crisis, and I'm going to share my thoughts on that and some data coming up next. Hey, what's going on, friends? Lots of news lately about potential recession on the way in 2019 and a housing crisis, and the news loves bad news, right? So I took a look into that, dug a little bit further, and really looked at some simple historical data to try and figure out, how much truth is there behind that? Is this something we really have to worry about? How much risk does the real estate market have? And so I'm going to share some thoughts on that and some historical data, which is the best thing to look at because the trends from the past really do give us some indications towards the future. So I'm going to show you that graph right here, and then we're going to go through it and talk about what the potential future is for the real estate market, because as humans, I think a lot of this recent news and talk about a recession coming triggers a housing crisis in our minds, because that is the most recent thing that we experienced in 2008 when there was a housing bubble. The housing bubble burst and it led to a pretty big recession that everybody remembers. But if you look historically through the years, recessions don't necessarily mean housing crisis, and really historically that hasn't been the case, and housing prices have survived recessions in the past, and in most cases actually continued to go up, except for the recession in 2008. So we're going to go back and look and see some trends, and then see what does that mean for the future, and do we really have to be worried and about some crisis that could be coming, because I really don't think that's the case. So here we go, let's take a look at the data. All right, here we go. These are the U.S. housing price trends from 2000 and actually 1970 up until 2016. So if you look at this over time, the blue line is the housing trends, and then the red line is an average of appreciation, which is about 5% per year. And then the gray lines here on each one of these areas is where there was a U.S. economic recession. And if you look at 1980 and 81, and then 91 and 2003 or 2001, in that area, these were all economic recessions, downturns in the U.S. economy. But as you can see, home prices barely fell at all. They continued to rise and continue on in the trend upward with the 5% appreciation that we've seen over the past few decades. But if you look at the recession here in 2008, there was a big drop-off in the housing market index, and that wasn't because of what was part of the economic recession, but it wasn't necessarily totally related to that. It was caused by issues in the housing market, which a lot of people are familiar with. But if you don't remember, lending was crazy. They were giving money out to anyone and everyone who wanted to borrow money. I bought my first house in 2004, and I was part of that, where I was young, in college, barely had any income, didn't have any savings, but still qualified for a mortgage. And luckily, I was responsible and paid my mortgage and held the house long enough to make a good return on investment. But there's a lot of folks that were not responsible, that didn't have the income that they needed in order to pay their mortgage over the long run. And also, when the economy turned, were underwater. And the other part that led to the housing crisis was people were refinancing their homes, pulling equity out, and spending lavishly on vacations, new cars, things that were essentially depreciating assets. So they were taking money out of an appreciating asset, spending it on depreciating assets, which historically isn't what most Americans do. Most Americans, in terms of home appreciation, they use that equity that they build to do things like start businesses or reinvest in a business, start a business based off of a good idea, invest in their children's education, things that make the economy better, stronger, make life better for all of us in the country, and potentially in the future become an appreciating asset. And in the late 2000s, that wasn't the case. People were taking money out, buying all kinds of stuff, or buying additional homes. So now they had 3 mortgages, and when the housing market took a turn, they couldn't pay any of their mortgages, and that led to the domino effect of a widespread housing crisis and the big drop-off in prices that we saw right here. But going forward, the housing prices have recovered, and even if there is an economic recession, the normal ones that we've seen, in the past about every 10 years, it does not mean that there's going to be a huge drop off in U.S. housing prices. Doesn't mean that's impossible, but if we look historically at trends in the past, we can definitely draw from the last 5 recessions that only one of them had a big drop off in U.S. housing prices. And there's a lot of other things that went into that outside of the larger economic downturn that we normally have in the economy. So there's some good stuff to look at if you do a little bit of research at the history of housing prices, and there's not that much to be afraid of. I don't think, I don't have a crystal ball, so you can't take that to the bank. But in my opinion, if you just look at economic data from the past, it's a really good indicator of where we're going in the future. And in today's market, anybody who's applied for a loan since the last recession, there's been a lot of reforms in terms of lending, and things have changed significantly. It's not as easy to get a loan as it used to be, and we're not going to see that type of irresponsible lending that we have in the past, because lenders are much more responsible. There's a lot more regulations. It's much harder to get a loan now than it was 10 years ago. So I don't think you're going to have this situation where there's widespread people defaulting on their mortgages and homes getting foreclosed on, short sales, all of those things that we saw in the distressed property era in the late 2000s. So let me know your thoughts on this. Let me know if you have any questions, but that's my opinion of the outlook for 2019 and housing prices, and even going forward to 2020. A lot of economic advisors think if there is going to be an economic downturn, it's really going to be probably in 2020. But that doesn't necessarily mean there's going to be a huge downturn in housing prices. So do some research, take a look at history. I think it's always helpful when we're looking towards the future. But if you think I'm wrong, if you think there's some stuff that we're missing here, always like to have those discussions. So let me know, put some comments in the comments below. And if you have any questions, you can always reach out, Dylan@buybigisland.com. And I'll see you guys next week. Aloha.